Hello, Stephen Cruz here with the Mortgage Q&A at mymortgagebroker.com, and I'm really excited to be here again today and to talk a little bit about mortgage financing. It doesn't look like we have any specific questions from our Facebook page today, but what I did want to talk to you about is a couple of questions I had over the last week from some clients who have already got a mortgage right now, and they're asking whether or not this is a good time to refinance or look at renewing the mortgage early, take advantage of the low interest rates. And what I said to them is that what is important is to review and see whether or not it's worthwhile and whether or not there's enough equity to do it. So one client example that I have, and I'm not going to give the numbers, I'm going to put the numbers here, but I can talk about the numbers. Basically, what we did is, maybe I should put the numbers. Maybe I should put the numbers. Here, why don't I share my screen and we can look at the numbers and see how it looks, so that you can understand, you know, the decision that they're going to come to. So, or they're going to be deciding upon. Anyway, so here it is. Their existing mortgage has a balance of $293,000 on it. The interest rate they have today is 3.29%. Their current monthly payments are $1,353. They have 28 months remaining on their mortgage. So it's basically a little over halfway from when they first started the 5-year term. And the balance at the end of the term will be $277,000. Let's just see if I can increase the size of this so that for some reason I can't. Let's see. Maybe this is better. Okay, increase the size so we can see. Anyway, so this is the current balance. The total payments over the next 28 months are $37,000, almost $38,000, and the interest over the next 28 months is $21,000. So what is available today? If we stay with the existing bank, they would get an interest rate of 2.39%. If we kept the payments the same and over the remaining terms, so they'd get a new 2.39% over 60 months. But if we compare apples to apples, the penalty is $6,800 to get out of this. So it's a fairly hefty penalty to get out of this mortgage, quite substantial. If the legal fees to set up a brand new mortgage is this, and the appraisal fees, if we had to set up a brand new mortgage, would be $300. We could probably switch the mortgage to another lender, so this is likely going to be zero, but I wanted to put worst case scenario in if they had to pay legal fees. If we were to switch it to another lender at the same time but not include the penalty, then this would also be zero. And but again, let's take a look first of all if they were to refinance the mortgage and add the penalty onto the mortgage. So then there would be some legal fees, there would be some appraisal fees. So the total cost, so the mortgage plus the penalty plus the legal and appraisal fees, is $301,000. At the new interest rate today of 2.39, keeping the payments the same, the balance at the end of 5 years would be $279. So it's $2,000 higher, a little less than $2,000. So it's $2,700 higher. Oops, $2,700 higher than it would be in 28 months from now. So the total payments are the same, but the interest cost, because of the lower interest rate, is substantially lower. So they'll save interest, but they're not going to save on the principal. So it's going to cost them a little bit more to do this than if they just stayed where they are. So the benefit for doing this is long term. So if we think that the interest rates are going to be higher 2.5 years from now, then it may be a good idea to pay this penalty and get the lower interest rate. And so legal fees, let's say the clients had the money to pay for this and they didn't want to include it in the mortgage, then there would be no legal fees because we could redo it with the same bank or with a different bank. There would be no appraisal fees because again we would renew it, keeping the mortgage the same but not adding any new money, and so there would be no appraisal fee, and so the total cost would be $300,000, and then the difference would still be around $1,100. It would still cost them about $1,100 over the next 28 months to do this, and so I don't think that it's worthwhile per se to do that. And it depends. There are some options where we could get a lower interest rate. So there is a lender who is offering a lower interest rate, and it's at 2.29, I believe. However, there's restrictions on that interest rate. So the restrictions are that the mortgage cannot be refinanced during the term. So what we're doing right now, midway through the term, would not be allowed with this new mortgage, this new lender. So it's risky doing something like that if you think you may have to do that in the future. So it's better to play safe and do it with a lender who would guarantee that. The other factors I always look at, as I said, is this 60 months. So over the next 28 months, is it worthwhile to pay this little extra so that you have 32 more months at a lower interest rate, lower payment? Because after 60 months, you've paid the mortgage down substantially, right? By $251,000, you've paid it down quite a bit after that time frame. So this is a question I had in the discussion we're having right now. I personally don't think that it's a good idea to pay this penalty to get a lower interest rate today, unless the clients are really worried about interest rates going up and aren't sure. What I would say is we keep an eye on it over the next year and see what happens. See what happens with interest rates. And then we can always do something as this penalty goes down, because it will go down potentially over the next several months. So with that, I haven't had any other questions, and it's really important for me as a mortgage broker to give you advice and to say whether or not you should incur some costs to do something. And in this case, I don't believe it is a good idea. So I would say, I'd say to this client, stay where you are. Let's keep an eye on it, but let's not pay $7,000 to get out of a mortgage that, 3.29 in comparison to today's rates isn't as good, but it's still a pretty good rate. And I don't think it's worth $7,000 to pay it out. So if you have a mortgage like that, or if you have questions about that, I'm happy to chat. And thank you very much. Until next week, have a great week. And if you do have any questions, please call me, email me, text me, or put the question on the Facebook page here, and we'll talk and answer those questions. So until next week, see you next Monday, 7:30. Have a great day.